Hey traders, this is Chris Buss, your host over at Traders Profit Compass with your Weekend Profit Navigator. What I want to do today is go over the indexes. I want to review the FANG charts that are all going to be reporting the balance of this week. And then I want to go into some of the SPDR sectors that look interesting. So let's get into it. SPY this week made a push to try and fill this gap from 323 up to 329. Got up to about 327 and was rejected. You can notice here that we've got some bearish divergences going on and that we've dropped below this rising wedge that has formed in the last few weeks. We put in a little doji on Friday, some indecision. I think the key levels to watch are to see if the bulls can break back into this trading range where the gap was above 323. I don't have it shown here, but if you look on the lower time frames like the 30-minute chart, you'll see that 319 is a key level. Along with 318, which is the 20-period exponential moving average. I think it really needs to hold that level or we're going to come down and test. There's a key level here at 314 that you might want to mark on your charts. Really below 314, we would pull back into this trading range and target a move back towards 300. Not saying that's all going to happen this week. We trade level to level, so I want to see 319, 318 zone hold, and then see if the bulls can get back above 323. If so, then the top of the range and a gap fill would be favored up to 329. Otherwise, we may drift lower. And of course, with all the Facebooks and Apple's and Google's and Amazon's reporting, it's really going to have a lot of market cap this week to push price around. So we're going to have to see which way it breaks. But really below 323, I think you can lean neutral to slightly bearish. Above 323, and to my eye is bullish. The Qs have been soggy the last week or so. You can see this well-defined channel that it's been working on for several months. We pushed towards the top of the channels, didn't quite make it, and we turned around. And Friday, we dropped below the lower channel trend line to close below this 255.43 level. And if you go down to the 60-minute time frame, you'll see there was a gap there. So that was gap support. We went down to 252 and basically filled that gap, but then closed near the highs. So for me, recapturing this channel on Monday or really any time in the next few days would be bullish and would favor a move back towards the top of the channel. But staying below this 255.43 to me is bearish, favoring a move back down towards 247. Again, we've got the big market cap tech stocks reporting, and those will largely dictate which way we break on the Qs. But as it stands now, below 255.43, neutral to slightly bearish, and waiting on the FANG results. Moving on to IWM, we spent the whole week with indecisive price action in this little trading range between 145 and 150. We've got a really nice trend line off the March lows that comes in here. I think the bulls are okay above 145, but there's a $3 gap below down to 142. If you're a bull, you really want to see that 145 hold. If you're bearish, you would want to get short on a break below 145 and look for a move down here to 142. If 142 fails, then you're looking at 140 and possibly 135. And really what's going to dictate this trade is the value trade. If everybody rotates out of big cap tech and comes back into value, that's going to support IWM going higher. If for any reason COVID headlines or headlines tied into the COVID fiscal response that the Senate is working on, if it looks like that's faltering, you'd probably see price come down. But for me, 145 is a line in the sand. Below, I want to shoot for a gap fill down to 142. As long as it stays above 145, then 150 is your target. And if it breaks out of there, then there's a small gap to fill here. And we could see, 155, 157 and a half. Moving on to FANG. Just to preface the discussion on all the individual names, I always try to get in the head of traders heading into a big week, trying to think about put myself in their shoes and thinking about what they might be thinking. When you look at the run off the lows for the FANG stocks, they've all had incredible runs. There's probably a ton of people out there with huge embedded gains. And given the sogginess of the last couple of weeks in tech, I'm thinking to myself, if I had a ton of gains, paper gains, on the books, do I want to hold through earnings given what's happened in the last week or so and take my chances that we rocket higher? Or would I be more inclined to book the win and then pick it up on the other side of earnings if there's a a sizable pullback? Or if I'm not in, do I really want to step in with a big position ahead of earnings, given what we've seen with Microsoft and Netflix and Tesla having poor earnings reactions? And for me, it seems like there would be more sellers than buyers ahead of the print. If I had embedded gains, I would be booking them and playing it safe. If I wasn't in, I'd be hoping for a dip to buy. So just from a psychological standpoint, what I'm thinking is more sellers than buyers heading into the middle of the week when these guys report. Okay, Facebook. We put in a divergent high. You can see price rising, but momentum falling and RSI falling. Kind of giving you a heads up to be ready for a potential trend change. While we haven't really changed the trend is still up. We did lose a key level support here at 240. Then we lost the 8 and 20-day moving averages. And now we were sitting on the 50-day EMA. That's a real nice toggle point for active traders. If you're bullish, you can be long against the 50 and hope for a bounce. If you're bearish and price drops below the 50 EMA here at 229.30, I think you can be short and look for a move down to 221. I'm not the kind of guy that trades earnings, so if it was sometime Monday ahead of earnings and we get a break down below, especially below 221, I would stay bearish. Otherwise, I would be out of the trade heading into July 29th after the bell. My trading process is to not be in for earnings. It's up to you whether you trade them or not. But for my eye, as far as the technicals, we've got fading RSI, fading momentum, and price sitting on the 50, which should be support. But if it breaks, I would try to be short for a $9 to $10 move to back test this breakout. Apple was really the only one of the FANGs to give us a decisive sell signal on Thursday. We said if it broke the trend line and broke 385, if you were long, you had to be out, and if you were bearish, that was a place to get short. We lost the 20. We lost this 370 level, which was a zone of support. We came down on Friday. We made a run at the 50. We didn't quite make it, but then closed on the highs of the day, which in and of itself, I mean, that's a good potentially bullish reversal candle. Now tomorrow, for short-term traders, if we hold this 370 level, I think you can be long for a potential bounce up to 385. If it falls below, I'd be in favor of being short-term bearish and looking for a move back down to the 50, down here at 353. But as far as those trading the daily time frame, especially if you were long, I would hope that on this signal that you got out. I think the bears have the edge here after this sell signal, and I'm looking for lower prices. We'll have to see how earnings plays out on the 30th, but as it stands now, I either don't want to be involved on the long side or leaning bearish. Amazon, we had this big bearish engulfing candle. We came down to support here at the top of the rising channel. We had that big Monday where it was up 7%. Following day reached towards the highs where it was rejected. We came back down. Friday we took a look below and closed above this 29.50 level. To me, that's an important line to hold. Below 29.50, I would favor a move down here to the bottom of the channel and support at 2800. I think you're going to find a lot of dipsters at that level. But those would be only moves ahead of earnings. I'm not willing to be in on earnings. So for me, the pivot point is 29.50. Below, leaning bearish. As long as it holds above, I think you can be long if you're a short-term active trader. On to Microsoft, we had put in this recent high. It had sold off after earnings. We got the Monday pop, and it's since been faded. To me, this 202.50 is the pivot point. On Friday, we took a deep look below, tried to reach for the 50 EMA here at 196.75. Didn't quite make it. Closed near the highs of the day. Could be a reversal candle. If it broke above 202.50 on a short-term basis, I think you can be long. Below 202.50, I want to remain bearish and look for a move back down to this 196.50 area. If that breaks, I think we're coming back to 190. For me, I think there's going to be a ton of people wishing and hoping for this to back test this original breakout level at 190. I think you're going to see a lot of buyers there. I would be a motivated buyer there. I think it's probably a stretch at this point to hope for a test of the 200. I think near term, I think they're going to try to bounce it here at 190 if it makes it. For my money, given the posture of the RSI breaking below 50 and momentum starting to come down, I'm favoring lower prices here short term, and I'd be looking to buy 190 when and if it reaches that level. Google, I don't really have strong convictions on this one. You can see here we had a divergent high, price higher, momentum lower, RSI marginally lower, was rejected here. Big red day on Thursday, came down to the 20 EMA, which it held after looking below a little bit. So it's sitting on the 20. For me, anything above 1525 is bullish. Anything below 1475 is bearish down to this nice trend line we've got here. Really below 1450, I would favor a move down to 1425, and if that breaks, then you're probably looking at a 200 EMA test at 1350. Not real huge conviction on this one. Probably just gonna step aside and wait for earnings to play out, see which way this one is gonna break. Still very close to the highs. So from that standpoint, nothing has really decisively broken yet. There's no sell signals yet. So I'd be standing on the sideline for this one. Moving on to the some of the spider sector charts that I found interesting. We've got the communications sector here with Facebook and Google being 44% of this index. Poised right here at like 56.50. I think that's your pivot point. On a break below, I'd be looking for $2 lower down to 54.50 and a test of the 50 EMA right here. As long as it can hold, I think the bulls remain in control. But if the reaction or if they're selling before the print and 56.50 breaks, I'd be looking for a quick move down here to 54.50. So that one looks pretty interesting to me, sitting right here on support. Technology, you can see this nice rising channel here. We had a pretty big down day on Thursday. I took a shot. If you go look at the 60-minute chart, you'll see that there was a 60-minute trend line break right here at like 107.50. I've got a small short position on that. We did get some follow through on Friday, pushing price back into this trading range. I'm looking for a short-term move down to the 102 area, where I am planning on closing my short. I would probably cover that short and get out on a break back above 106, 106.50. That would kind of negate the sell signal that I got. So anyhow, with price in this trading range between 105 and 102, I'm leaning bearish, looking for a move back down to the bottom of the trading range. And that's something to keep in mind when you're trading. Whenever you have a breakout from an area of value, You break out. This is perfectly normal, a back test of that range. It bounces up, but now it's broken below. Whenever you break above an identified trading range and then come back below, it's bearish and then favors the bottom of your consolidation range. So that's what I'm doing here. I'm looking for a move down to 102. Moving on to XLI Industrials, we've got Boeing this week on the 29th, sitting right here at a key level at 71.50. That's your pivot point. To me, anything above is bullish. A break below is going to be bearish. I would expect price just to kind of hang out here for a couple days until Boeing reports on Wednesday. We do have 3M on Tuesday before the bell, so that could be a potential market mover ahead of Wednesday and Boeing. But below 71.50, I think it's a good risk reward to be short. Looking for a move back towards the 20 and the 50 EMA. Utilities here at the top of the range, 61 is your pivot point. Any break above that, I'd be in favor of getting long. I would alarm that level. If the market slides and things get defensive, I would expect a pop in XLU. For those of you that are part of the group, you know we were long knee, Nextera Energy. We had a good run on that. So if you're interested in utilities or looking for a breakout here, alarm 61 and take it long if you get it. Healthcare, we had this divergent high. You can see price rising, momentum falling. We've got RSI testing the trend line here after this move down. The key level for me is like 103.75, 104 area. Anything above that, I would want to stay bullish. A break below the 20 right here at 103.50 is going to favor a move back down to the 50 EMA at 101. If you're a short-term trader, I would get short on a break of this 20 EMA at 103.50. Consumer discretionary, I mean, this is basically an Amazon chart. Amazon represents 25% of this index. You can see we've got a trend line off the low, and we've also got this, I dropped in a alternate trend line, which I really like better in terms of a signal. I think you can comfortably stay long above this 131.50 area. Right here just below the 20 EMA. I think below 131.50, below this trend line, I think you want to lean bearish if Amazon has a bad report or a bad earnings reaction, breaks price here down below 131.50. I think you want to be bearish in that situation. If we come back down and tag it, hold above, I think you can be long. So, moving on, I wanted to show you some risk-off assets. I know we don't cover this one very often, but it's dollar-yen. Traditionally, this is a risk-on or risk-off currency pair. When dollar-yen is rising, it signals a risk-on environment. When it's falling, those periods are usually marked by risk-off in equities. And I wanted to highlight this action on Thursday and Friday of last week where dollar yen took a sharp break down. You can see that this 106 level has held for 3 months. Set yourself an alarm on dollar yen at 106. If you see a decisive break below, I think that's a sharp warning sign for a potential risk-off move in equities. It was right on the money here in June. We had the break. This was the equity high right here. Dollar yen moved down. We got that move down in equities as well. We had it back in March. We had it at a certain point here. Should say in late February we had a move. In late March we had a move. Here, dollar yen is making a break lower, and that concerns me on the bull side. It has me a little bit cautious. Now, if it holds here and breaks up, less worrisome. But if it breaks low, down into 105s and then works its way to 104s, especially if SPY is hanging, flat, I'd be worried about a break lower. So watch dollar yen. I know it's not one we often cover, but it's a very important pair to watch. TLT, 10-year bonds. Bonds have been not buying this rally. Here was the equity high on June 7th. And TLT marked the low, but as SPY has risen since the 8th of June, TLT has risen with it, and that's not what you'd expect. So yields are falling, bonds are rising. I'm kicking myself for not trading this. The levels have been very well defined. You can see it stair step up, consolidate, break above, holding trend the whole way. They are not buying this back to normal V-shaped recovery. Yields are still falling. They made a brief pop, but they've been faded on yields, and bonds are moving higher. They're sending a warning flag for equities that there's trouble ahead. Keep that in the back of your mind. I don't have the charts handy, but gold and silver are going parabolic. Gold is a traditional risk-off asset. It's going straight up. So, taken all together, precious metals spiking, yields falling, dollar yen falling, QQQ soft, not broken but soft, and heading into mega cap earnings at the end of the week. I don't want to say make or break, but it will be important. Also looking ahead to this week, and I outlined it in the written note, we've got the Phase 4 COVID deal being worked on in the Senate. There seems to be a holdup there. It remains to be seen whether that holdup will persist or there'll be a breakthrough. My base case is still that a deal gets done, and that'll be market positive. But we've also got Powell on Wednesday with an FOMC meeting. And if you look back over the last few times, the market always seems to want to fade Powell. It really doesn't matter what he says. There'll be an initial head fake higher, and then they take it down. So, The FOMC is always a wild card. I don't really try to trade it per se, but the market has, faded it the last few times, and I know he'll be pumping. He'll have something up his sleeve to roll out to kind of keep things pumped up, but it remains to be seen whether the market likes what he has to say or fades it. So anyway, a lot going on this week. Stay nimble. Don't be married to any bull or bear case. Let price lead the way. Stay flexible and fluid in your thinking. And if you're not sure, the safe thing is always to step aside during these big earnings. To me, you have no edge on whether the earnings will be good or bad, or the reaction to the earnings will be good or bad. So I'm always playing a defensive game when it comes to earnings. I'd rather pick the ball up after the dust is settled and see which way the trend is going to go. So anyways, have a good week. I hope the video helped. There's more detail on the blog. I encourage you to click over there, see some of the other detail. Really appreciate you spending part of your Sunday afternoon with me. Hit the like button if you like the video. Please subscribe to the channel, and look forward to sending more content your way soon. This has been Chris Buss with Traders Profit Compass. Have a good trading week.